Hey everybody, this is Evan with HedgePulse.com. If you're new to the channel, subscribe down below, hit that like button. What we're going to get into today is a little bit more about how to use the app and, get set up, things you're going to see. So currently it's pre-market. You can see by the time here, 9:28. So you'll see NA in these columns. And it's going to be like that on anything. Stock Center B, Command Center, because there's no data. See, I have not clicked on these since yesterday. This is what happens if you leave it open overnight. Just wanted to show y'all that. Or, if you open it first thing in the morning, it should just be loaded up and it'll load in and look like this. Also, don't really look at this stuff pre-market. You can look at the volatility matrix pre-market. Other than that, check these out. Check the GEX, the delta exposure, and, the totals overall. So first thing this morning, what jumps out? We're red on SPY. We're red on QQQ. Okay. With SPY, we are going to open, it looks like, because the mark price is that'll track the overnight price. So currently we are below the 470 level. Or I'm sorry, let's see. We're closest to the 470 level. My apologies. So the first thing I noticed with this is SPY is, we're right at the 470. Probably going to touch it right out of the gate. Let's just watch it and give it a second. So as you can see already, you see this develop. First thing, a lot of puts, okay? So let's watch what it does here. I'm going to open SPY chart. So what I'm doing here is I made a GEX study for Thinkorswim. And you can go in here and change the levels. Give me 1 second. So 476 looks like 472 is this. I'm having to look at a screen to my left also. But anyway, so 470, 180 right now, 81, 82, 80's fine. It's close enough. 471 and 470. So far, we have 473, 472. So these down here are for this. 471.6, 471, and 470. So quick and easy, Just do this. Now, see, 471.30 is now. So, see, now it's 26. That's close enough, Go ahead and drop it one more. Nope, now it's back at 34. I'll just leave it there. Now, you don't have to update that every time it changes, obviously. I wish there was a way I could connect that to the app. And trust me, if there is, you'll be the first to know about it. But anyway, what do we have so far? We traded down. So here's the 470 level. First thing we did is open up, pop a little bit, and I wouldn't even call that a pop, but we just fell. Why do I think we're going to go here? Well, it's a large area of hedging where they have to hedge. When I say they, I mean the market makers, hedge funds, anybody that is in the options market and is delta neutral as a strategy has to hedge. Now, the way that pretty much everybody, it's a consensus, the way that pretty much everybody looks at the stock market is we have to make some assumptions about options, okay? Because we don't know if they open or close the position. We don't know if they bought or sold the option. We just know that somebody sold it and somebody bought it. That has to happen, right? Period. For a transaction to take place, somebody has to buy an option and somebody has to sell an option. So the assumption that we make is that all options are hedged, essentially. And when we look at the volume and the open interest of any particular stock, we assume that puts are sold. That's why it's negative gamma, and calls are bought. Okay? Those have to be hedged. And by making this assumption, that gives us the framework to think about gamma squeezes and negative GEX like trading below the TrueZG, if you see this bar and it's red, you're in negative gamma, in a sense, okay? It doesn't always have to be below this TrueZG. Pretty much always is, but that's not always the case. If there's a ton of red down here and there's very little green and you're somehow barely in the green, this could still be red. So anyway, not to get too in the weeds, let's just let's watch what's happening here. We've got the tick matrix is red, right? As you can see, QQQ popped green for just a second here. Let's see where QQQ is. 400 level, 417. Delta, has quite a bit of puts above. And one thing that you'll notice a lot of the time, the bar on the right, it'll start out small, but it'll grow to be huge at some point during the day, right? And sometimes it remains real balanced and close to zero, but a lot of the time this right bar will, if there's a ton of options volume, the way that gamma exposure is calculated, this bar will grow, sometimes it'll be 10x the size of this one, okay? Now, one thing to really pay attention to here is for a trend day to really happen, this should all be green or red. If you're trending down, it should all be red. The AD volume all being red, that signals that it could turn into a bearish type of day. We'll just need to keep an eye on this tick and this the AD ticker number. The tick matrix is how many stocks ticked up versus ticked down in the last second. This is how many stocks ticked up or ticked down from the open of the day. Are they above the open or below it? And how many? Okay. Back to the volatility matrix. When you see it going up to the right, that's generally the way the market will likely go. If you see it going down to the right, so the shorter term's higher than the longer term, that's when volatility's in a thing called backwardation. If you're not familiar with that term, all it means basically is shorter term volatility is higher than longer term volatility, and risk is perceived to be now. It means people are having to buy the ask on put options, and it's driving the price of volatility up. Now, I won't get into the way that options are priced a whole lot. Just know that implied volatility changes basically in relationship to how aggressive buyers are of options and how aggressive sellers are. So, for example, if people are buying the ask on calls or puts of options, the volatility is going up. A lot of people think that if you are buying call options, the volatility is going down. That'll happen most of the time because most of the time people are not buying the ask. Think about NVIDIA and Tesla. When you look at the skew, we'll just take a look at it and see what it is right now. Implied volatility. Down here, we're looking at 34% and it goes to 43%. What is not necessarily usually normal is this. 35% is at the money. It goes up out of the money. So what does that mean? It means people are buying calls in NVIDIA. Let's look at SPY. What does it do? It goes down for the most part. Once you get out to 5 delta, the 5 delta range, it starts going up again. So where does NVIDIA do that at? NVIDIA starts going up 40 delta, 50 delta almost. Yeah, 43 delta. Okay. What about Carnival? I don't know how many of you all trade Carnival. See, we're looking at 5 delta. It doesn't go up till about 5 delta. So they're not, that's the typical skew that you'll see. 5, 10 delta, the implied volatility on the call side will start to go up again. But you look at something like Tesla, NVIDIA, there's a ton of call buying, right? Let's look at Walmart. Walmart goes up slightly. So Walmart, things like this are not immune to it. I had a trade a couple of years ago. Walmart had earnings and the activity and the gamma exposure chart that I saw was just kind of crazy for Walmart. And I put this trade on and Walmart went from about $135 to about $148 in about 24 hours. And I had a different trade that was AMC when it was running up. I was in that thing The day that it had the gamma squeeze, I was in that thing from $38, might have been $36, up to about 70, something like that, 71 maybe. Let's see, what did it? It was something crazy. This day right here, or I'm sorry, this day I bought in at about $36, just because of what I was seeing on the gamma exposure charts, essentially. And it popped up and ran. Yeah, if I'm not mistaken, I got out at about 75 on this day, and yeah, let's say I did not see that coming. When a stock does 100% in a day, I don't know anybody that would be mad except for me on that day. Watching this thing, yeah, good Lord. I blocked that out of my memory, I guess. Anyway, back to the app. Down here is our negative gamma level. 470 holding strong. I don't think, unless we see a lot of put activity come in here to push us down, I don't think we're going to have enough juice to make it down here and take these out. However, with that being said, if there's not a lot of option volume coming in here to push it below 470, we're not really going to go down below it. Now, QQQ, it's staying above 400, and SPY's staying above 470. So, in a perfect world, if this came down and touched this and then you see it start turning green, or if you like to get in super early, you could place a buy order here with your stop a little below somewhere, depending on your risk, and expect this thing to turn around and go back to the upside a little bit. You know, it could be a scalp trade, but you know, I don't know that I'd necessarily make it a longer term trade for right now. Reason being, all of this is red. Basically, you want to think of this bar here. This is the hour. Just think of it as like a meter. As soon as it comes down and it's fully red, you know, it's pegged out. This thing likes to return. There are occasions when it will stay pegged out red, but they're rare. You know, like after a Fed day and the market doesn't like what the Fed said, or some other big event, COVID crashing, that will keep this all the way red. Turning it around like a real sharp recovery, this thing could stay green for sure, just because of the way that the market works. And I kind of went into this in a different video. I don't know if you all have seen that, but I'll go over it again real quick. This is our negative gamma zone, okay, for the day, right? Now, this was at 471.30 earlier, so that's why that's there. If we updated this to the 470.60, you know, you would just move this down. So 470.60, this is our zero gamma, basically, right here. So 470.60, this is negative gamma on the day. And the negative gamma from the overnight chart, this left chart, is right there. However, that level did also move. So 471.80. So right there is our zero gamma for the overnight chart, which is this. This is the more important one, for sure. By far, this one is more important. However, this one does come into play down here. This does come into play. Anyway, we've still not hit the NG level. You'd be surprised how often they hit this to the penny. I'm telling you, it might be a penny or two off a lot of days. Think about that. And okay, so what we just saw here is it pushed down into the negative GEX level. And let's see how it reacts. So far, it's just pushing through, right? So far, it is pushing through. Let me auto size this. There we go. I'll go ahead and take these off the screen. I think you all got that. So look at this. We're seeing it push down. Found some support. Now, when was the last time we were this low? The last time we were this low, it's lower than yesterday, right? So the last time we came down here, was about right here. Okay. So by them coming down here, let's say that you bought in here and you were long from this level. And, you know, some people may put their stops right below these levels. Like people that bought in these candles, there's a good chance that their stops are somewhere down in here, right? So what did we just do? A lot of people, you know, have different beliefs about what happens in the stock market and about if stop hunting is a real thing. It absolutely is. What they're doing is they're just searching for liquidity. The market moves to and through liquidity, period. It has to move toward where there's going to be the most buyers and sellers, right? That's just how it happens, you know? Things have to be traded. The market's going to move. It's going to move to where the most action is. That's why a book map is also another really good thing to use. Anyway, so back to this, you also see the volatility pop right here. Remember what I said earlier about if the market is going to go down, you're going to have to, like if it's going to go below NG, you're going to have to see a lot of puts being bought. Okay, well, this morning we've had some puts being bought, and then they, you know, not so much, being bought more, not so much, and then they were bought more and quickly. But there's a pretty good shot that this is just going to go right back above NG. Unless this implied volatility continues going up, we're bouncing, okay? Period. So I'll let this record, and we'll just watch it play out. I will look at this also. QQQ, where are we at in relation to that 400 level? It's holding. It is holding. Currently, it's, you know, they pushed it down just like they did in SPY. So there you go. I hope that answered your question about the accuracy of this. I just laugh about it, okay? Because it always lines up. It always lines up. This is no mistake. It's no mistake. You got to think about it this way, okay? When you come to the stock market to trade, who are you trading against? You're trading against people that have billions of dollars. They may have trillions of dollars under management, okay? They can move the market. They can do what they want with the market if they get synced up on the same page. And you want to tell me that they don't talk to each other and get synced up every now and then? Call it insider trading, whatever. They've got more money than countries have money, okay? They know what they're doing. Let me ask you this. Now, I'm not saying that this product is going to turn you into the Kobe Bryant or Michael Jordan of trading. But listen, if you were going to play one-on-one, just, you know, everybody's played one-on-one basketball pretty much, right? If you're going to play one-on-one against Kobe or Michael Jordan, hell, pick any NBA player. They're in the NBA, okay? But let's just say, because you are going against the best. If you trade the SPY, if you trade the NASDAQ, if you trade the ES futures, the QQQ, NVIDIA, Tesla, who do you think you're going against? Are you going against the kid at the rec center from high school? No, unless you went to high school with LeBron or Kobe, whatever. So you're going against the best of the best, period. How do you plan to compete? No, seriously, ask yourself that. What is your edge against Kobe Bryant? Unless you're 7'2" and your name's Shaquille O'Neal, you don't have one, right? Literally none. Zero. You have no edge. Whatever edge you think you've got with moving averages and these lagging indicators, MACD, whatever letter you want to throw out there, you don't have an edge. You do not have one. If you think that's your edge, you don't have one. I promise you. I'm not saying this to be mean. I'm not saying this to be rude. I'm just trying to be honest. Like, I have traded for 10 years. I've done this. I've been around the block. First year or so I had started trading, I was maybe 18, 19 years old. I'm 30 now. First time I started trading, I came across this guy talking about the Ichimoku cloud. I was like, there's got to be something better, right? There's got to be something that's more accurate, gives you a better idea. That's what I set out for. I wanted to find the truth. Like, what is undeniable evidence of what the stock market's doing and what it's going to do? Now, I was a little foolhardy in thinking I would find like the holy grail, but that did not keep me from looking for it. Now, I want to put a full disclaimer out here that if you don't know how to manage your risk, it don't matter how good of a trader you are, you will lose money, period. Too much risk, mess your whole account up. Don't do that. Manage your risk. Have an idea of where it's likely to turn around at. What was I saying 10 minutes ago? Not even. When we were back here, we're going to probably push down into the 470 level. A lot of the times, it's accurate to the penny. Look left. What are they likely to do? Well, until you see a bigger volume spike, like if it came down and just touched this and you saw this volume spike on the candle that tapped this, yeah, it's probably going to turn right then. However, you need to look for a big candle that gets bought up at the bottom and is on increasing volume. And then you need to see it go up. It needs to go back up. Okay? That's what I look for. But let me go back to the edge thing. And the reason that we're called HedgePulse is because all of this stuff is the pulse of the market. And this is how market makers have to hedge. Essentially, what's your edge? You know, to an extent, what they have to do, right? That's the whole point. Back to the, Michael Jordan, Kobe Bryant example. If you're going into that game and you don't know some of their patterns or their tendencies, how to guard them, what to look for, like as soon as they're going to go left instead of right, or, do a fadeaway instead of drive, right? If you're familiar with basketball. If you don't know kind of when they're going to do that beforehand, like think about that. You're playing in real time, right? You're playing basketball real time. And, Kobe Bryant would break my ankles, okay? Straight up. That'd be broke. I'd be laying on the ground. He would juke me so hard I wouldn't know what to do, okay? But if I knew that every time he did this little thing with his shoulders to the left, he was going to go right, would that still happen? Nope, it would not. If I was on defense in football and I was playing against Tom Brady, and I knew when they did this certain formation and Brady, had a certain cadence, that they were going to throw it to Julian Edelman or, to Gronk or whatever, or they were going to do a run play. If I knew those three things, Michigan, I would be much better prepared for how to defend, right? So, anyway, now, look. We're back at the NG level. We literally just come down, tag it, and they start buying it back. For those of you that scalp futures, that's an amazing thing right there. If you could get filled like right on that line and it pops like that, oh, it is so nice, especially when it, does this right afterward. So now I will say we do have quite a bit of negative delta that's came in here. These are very red. I just don't think that the market's trading together enough to really do anything. Let's take a look at this. NVIDIA, Microsoft. Well, Microsoft's in the green. Yeah, Microsoft's not going to do it. NVIDIA, it's barely in the red. I mean, it's just got below ZG. So if we're going to get pushed down, NVIDIA's going to take a big part of that. And Tesla's already below its NG level. So, yeah. That's mainly what we got here. So, we'll see how QQQ is holding up price-wise. So, QQQ is below 400. Is there a shot we go down here and run the stops on this level? Absolutely. I do believe so. But there's going to have to be some put buying come in. The puts have been bought. They came in, they bought them. So what we'll do is we'll go in here and change this 469, 470.51 on this. So we'll do that. 471.86. So that's fine. We'll just leave that there. This is our new level intraday that, there's a good chance they're going to be targeting. If it's going to push below NG, you need to see a lot of puts being bought, which we have seen exactly that. You're going to see that, and you're going to see the implied volatility going up. Implied volatility is at the high of the day, okay? We are seeing a bit of volume come in on this candle, though. I imagine if they push it down here, you're going to see a ton of volume. If they're going to turn it positive, they got a lot of work to do. Going to have to be a lot of calls coming in for all that. So it's going to have to outweigh the negative here. So anyway, we'll be back. Okay, so here we see that we have came down and hit the NG level for today's traded. What we're going to do now is just pay attention and let's see if this shifts any lower or if we see a lot of negative deltas still coming in, which, we've got quite a few here. That would be a bad sign. Keep an eye on the tick matrix. And you also want to keep an eye on this volatility down here or this one. Implied volatility going up will lead to this going down. Now, if we start to see the implied volatility kind of roll over, then we'll probably bounce right back up to at least this NG level. So taking out all these highs right here. So to come back up through, could be a quick move. There is increased volume on these candles, so we'll see. Okay, so welcome back. After seeing what has happened here, like I was saying, we came down, we tested the 469 level in SPY, and wasn't to the penny accurate, but certainly wasn't too far off. So you see it comes down, brought it back, tried to push down again, brought it back, pushed down again briefly. And essentially what was happening here, if you look at the volatility, what you're going to see is it just kind of flattened off here, right here. And, it crept up a little bit. They tried to push it down. And, there just was not enough activity. Granted, this was also at 10:43, in the market. Obviously, if you've traded for a while, after about 10:30, volume really starts to die off a little bit. Looking at this, it gets back above, hard push up, right? Kind of that vertical movement I was talking about when you're under the 0 gamma level, which is the TrueZG. When you're under that, you get these pushes and, they just kind of push straight lines, right? As participants buy, market makers have to also buy when you're in a negative gamma scenario. generally speaking, though, it starts off, to the left. You have to break below the ZG, and it's heading down when it starts. So you get these violent kind of straight line moves down. Anything under this right here, ZG, TrueZG from the overnight is this white line. You get these pretty linear moves. Even this one, this was quick. You get these linear moves, and it'll push. It'll, go sideways for a minute, push, go sideways for a minute, push back up, sideways. Now, the question is, do we push up or do we push down? Here we've already tested this level. So we're going to need to see back to the market matrix, this right here. We are not seeing red across the board. We could push back down to this, but, we're going to have to see the whole market start trading together to really get a pronounced downside move. Okay? This is most likely. Now, this is all red right here. But we're going to have to see the 1-day volatility, 9-day volatility really both start moving up. We're going to have to see these green bars start moving down some. And the volatility would start creeping up. This volatility, this right here is essentially this volatility. For SPY, this is basically what this is looking at. So it's tracking the VIX 1 day, the VIX 9 day, the VIX 1 month, and 3 month. Like I said earlier, if it's going up to the right, that's probably what the market's going to do. If it's going down to the right, yeah, you're in trouble. Yeah, if you see this going down, get ready. It's about to get crazy. But, like I was saying, we're getting a little push up here, a little activity. So we'll leave this be for a moment and check back in a little bit. Hanging out at 470, the NG level, and it's a battleground, people. It is a battleground. That's what we're fighting for right now. So, as you can see, the implied volatility's flattened out over the past hour or so. It was dropping while the SPY was going up, but starting to creep up just a tad bit. We're still at the volatility matrix. We're still looking at, contango, as it's called. Contango just means the shorter term's lower than longer term, which this is typically the state the market's in, and typically the market just kind of, grinds up a little bit. But looking at the advanced decline ticker number, we have green in New York Stock Exchange and NASDAQ itself. SPY and QQQ, they are red. But here's the thing to look at, okay? So the NYSE and the NASDAQ, they both have, thousands of stocks. So generally, when you get a strong move like a trend day, you're going to see these will be over 1,000, both, well over 1,000. These, like the SPY has 500 in it. So it'd be a negative 225 right now. That's, that's almost majority down, right? So basically what that means is there's 225 more stocks down in the S&P 500 today than up, okay? And for QQQ, there's only 100 in that. So 53. Yeah. So 53 to the downside, over half of the NASDAQ is also red. So if we move this out of the way, here is QQQ. It's at 398.73. The NG, the first big level we look at is 400. We looked at that earlier. And then 398 now. It's the biggest red bar, 398. We're getting close. We're getting closer. So the delta 399, a lot of 399 puts have been bought today. Looks like. So this is just a quick rundown on how to use this, things to watch for, things to stay on the good side of the market. And we're seeing quite a sell-off here. So QQQ, how low can it go? Well, I would suspect the 398 is where QQQ is heading, and I would suspect 469 at least in SPY, which, we're there. We are there. I like how earlier it came down, tagged it, and ran up. So remember, below this, ZG, all of this is we're in negative gamma down here. If we're below this line, it's negative gamma. This line is this level. Here we go. Got the little pop. They're holding the 469. Let's see how close the QQQ got to the 398. 398, 09, 08 maybe. Pretty close. Pretty close. So these are the current levels for QQQ today. 399.40. It's 400 levels key. But see, the 400, they push below, push back up to it, and it gets rejected. And then they run it down here, push it back up, and then they push it back down to the almost 398. Now will they push it back up to 400? So you tend to get more linear moves, like I said, under the NG level. Okay. We'll keep an eye on it. So SPY ran down, tagged the 469, and then ran back up to the 470. Okay, guys, so now that we've had a little bit of time play out, let's take a look at options. Okay, let's say you're trading 0 DTE options. It's a lot of people's favorite now. So what we have here is the 469 call if you wanted to trade it. Let's say you wanted to get into a little cheap call, as we were talking about earlier, you have the 469 level that should act as support here. So there's been several times today you could have traded it. I'll try to line these up the best I can. 1050, which is about right here. So right before this made its run up the first time, you could have got in $80, $89, looks like, $90. And it ran up to about 130, okay? So it ran up to about 130 right here. Where did it run up to? The ZG, right? The next one, this right here. This dip was right here. Could have got in about $74, and it ran up to 133 again, and it even ran up to about 180, and it held value right here at about 170 for a good bit of time, so you had plenty of time to get out. And I mean, that would have been $73. You could have almost doubled your money just on that move. You could have more than doubled. You could have made $100 on that trade. Okay, $74, make $100. It's good money. So let's say you bought 5 of those, 10 of those. Hey, you're done for the day, right? Could be. Anyway, this last time when it came down, breaks through, comes down. Let's say you have a little order in here. You try to get back in for, $70. It ran back up real quick, but 72 to 140, almost $150 doubled up in what amount of time? 5 minutes. It took 5 minutes to go from 70 to 140. That's just a quick example of that was the 469 call expiring today. 468, once we get loaded here. Now, when you get some gamma movement like this, it can be better to do at the money. If you're looking for a higher percentage gain, at the money, 1 or 2 out of the money, if it is going to move enough, we'll give you a higher percentage gain, but the odds are obviously more against you. Has a higher likelihood of expiring worthless, but, if you're buying option 0 DTE, you're not going to hold to expiration. Like, you need to get in and out. It needs to be quick. Anyway, so this is the 468 call expiring today, January 3rd. Was, 145 roughly. Ran up to about 200, so $50. Came back down. Could have possibly got back in about 130, 140. Now this ran up to about 270, so that's another double. And then here, back to about the 130 area and up to about 212, so another $70 trade. Okay, so just want to give you all some examples of options, how you could look at this, how you could trade around these levels. Anyway, again, like I said, if you like this video, hit that like and subscribe button. To access HedgePulse, go to hedgepulse.com. Pricing. We've got 3 different tiers you can pick from. The one you're looking at is the elite version. Right now we have a discount. Be sure to use that coupon code when you sign up, and look forward to having you. So y'all have a good day. Have a good week. Good luck trading in 2024, and Happy New Year. Talk to y'all later.